The U.S. Federal Reserve has made a move that is impacting markets as much as the trade talks. The Fed has cut interest rates for the first time since financial crisis in 2008. The move was not welcomed by U.S. President Donald Trump, who said it was not enough for the U.S. to keep pace with China and EU. For more details, we have Roy Rattenberg from Washington.
As America's central lender, the U.S. Federal Reserve plays a key role in determining the price of borrowing. When the economy is sluggish, lower rates encourage people to buy, to build, to be big. They also encourage companies to invest, to expand, to hire, because money is cheaper. Lowering rates can stimulate growth. When it's needed, the bank steps in. The U.S. president has been touting America's economic success, he says, under his leadership. And yet for months, Donald Trump, who's seeking re-election, has been publicly pressing the otherwise independent Fed to cut rates, raised 7 times on his watch. On Wednesday, the Fed chairman, Jerome Powell, delivered.
We decided today to lower the target for the federal funds rate by 1/4 percentage point to a range of 2% to 2.25%.
Powell was appointed head of the nonpartisan Fed by Trump, who said that decision may have been a mistake. Even this rate cut was criticized as insufficient, with Trump taking to Twitter saying, "As usual, Powell let us down." Trump had lobbied for the Fed to signal a lengthy and aggressive rate-cutting cycle. Powell on Wednesday defended his move, calling it simply a mid-cycle adjustment.
The outlook for the U.S. economy remains favorable, and this action is designed to support that outlook. It is intended to ensure against downside risks from weak global growth and trade policy uncertainty,
namely the ongoing trade war with China. Talks in Shanghai ended Wednesday with no clear progress toward a deal, and U.S. and Chinese negotiators agreeing to resume negotiations in September.
It's not exactly the same as watching global growth, where you see growth weakening, you see central banks and governments responding with fiscal policy, and you see growth strengthening, you see a business cycle. With trade tensions, which do seem to be having a significant effect on financial market conditions and on the economy, they evolve in a different way.
Powell was cautious to say he wasn't criticizing the president's policy, just responding to the consequences. Traditionally, the Federal Reserve has always acted as a sort of firefighter, but some say under the Trump administration, its role has morphed into more of a gardener, if you will, pruning the economy to keep it healthy. Some fear if there are more cuts, as many expect, there will be nowhere left to go when the economy crucially needs them. Roy Rattenberg, CGTN in Washington.